Welcome back, folks. This is FEX Insights episode number 4, and we've got a special one in store for you because we're going to be live for the guest interviews up on the Gold Coast for DECA Week. That's the Digital Economy Council of Australia. We'll get you the news right now as well that you might have missed out over the last week, as well as diving further into the markets. We looked at derivatives, we looked at market infrastructure, we even went into dark pools, and now we'll get into trustees. More of that inside. And now over to the news. First up, in institutional finance and capital markets, we see stablecoins entering mainstream finance. We've seen much of this, but now it's really happening a whole lot more. Firstly, stablecoins, digital tokens pegged to fiat currencies like the US dollar, if you didn't know already, are increasingly entering the mainstream, driven by their growing usage in regions with unstable currencies and limited banking access. So there's various companies doing this kind of stuff, seeing increased operations and activity in terms of what they're doing across the world. Big financial and tech firms are exploring stablecoin adoption, prompting US lawmakers to draft regulations. Key provisions include reserve disclosures, capital requirements, and restrictions on interest and yielding stablecoins. More on that in this article. Next up, it's corporate adoption of Bitcoin treasury strategies. We've mentioned this in previous news, and now here's more. A growing number of companies with no prior ties to cryptocurrency are adopting Bitcoin treasury strategies by purchasing digital assets like Bitcoin, Ether, Solana to boost their stock prices. Approximately 60 such firms spanning industries from software, healthcare, and more have joined this trend, and we expect to see more. However, this surge raises significant concerns due to crypto's notorious volatility, which could lead to sharp declines in both token and company stock values. More on that here. Hedge funds are expanding crypto trading operations. So various companies such as Cube, a prominent hedge fund that manages $28 billion in assets, is actively recruiting quantitative crypto traders to work every other weekend, along with a regular 4-day work week shift. This move reflects the necessity for constant market presence due to the 24/7 nature of crypto markets. Other financial firms like Virtu Financial, Brevin Howard, and Point72 are also looking to bolster their crypto teams. More here. And finally, the UK's FCA is considering lifting a ban on crypto ETNs. The Financial Conduct Authority, the FCA, is considering lifting its ban on retail investments in crypto exchange-traded notes, ETNs. This is aimed at enhancing competitiveness and establishing a clear regulatory framework. While this move aligns with the UK and other countries around Europe, experts argue it is insufficient to position the UK as a global crypto hub. For more opinion on that, check out this article. Now over to crypto infrastructure and market developments. Cryptocurrency exchange Bullish, backed by Peter Thiel, has confidentially filed for an initial public offering in the US. It's aiming to capitalize on heightened investor interest in digital assets under the pro-crypto Trump administration. This move aligns with a surge in crypto-related IPOs. We saw Circle last week, spurred by Trump's favorable policies, which have boosted Bitcoin prices above $100,000. Circle Internet Group, which also had its IPO recently, exemplifies the boom, soaring 170% on debut and adding another 30% the next day after it initially IPO'd. It's valued at nearly $20 billion. Institutional adoption is growing with companies like MicroStrategy, GameStop, all adding Bitcoin to their treasuries. If you're interested in ETFs, here's one for you, as Trump Media Group is filing for an ETF. Trump Media and Technology Group, the parent company of Truth Social, has filed for a registration of a Bitcoin exchange-traded fund named Truth Social Bitcoin ETF. This is in partnership with Crypto.com as custodian and Yorkville America Digital as sponsor. This marks the latest crypto initiative linked to President Donald Trump's administration, which is working to deregulate the cryptocurrency industry. Crypto and ETF correlations can be seen here, and as you can see that the SPY and other major ETFs are really well correlated with things like Bitcoin and Ethereum. This makes sense given that a lot of these ETFs and crypto have been trading like technology, like risk-on assets, and that is very clear when you look at the prices. In major acquisition news, we saw Stripe get further into the crypto space. They had a major acquisition not long ago, and now they've also gotten more into the digital wallet space with this acquisition of Privy for an undisclosed sum. This makes sense given that they are looking to get into the $250 billion stablecoin market. More on that in this article. And finally, over to the regulatory landscape. Major news as US legislative developments in crypto regulations saw the Clarity Act, a 236-page bill, under consideration. This aims to define a regulatory framework for digital assets. This bill has faced Democratic pushback, though, with concerns that it may add confusion and advocate instead for a collaborative regulatory approach between the SEC and CFTC. Additionally, the Genius Act, one of the Trump administration's legislative priorities, is progressing in Congress, with a Senate vote expected soon. For more on that, check out this Axios article. And that's it for the news this week, folks. What you'll see now is various interviews from our time up on the Gold Coast for DECA Week. You'll see some great insights from folks that are up there, people that are working in the industry and looking to change the shape of commerce with Bitcoin and blockchain and various crypto technologies. Cheers. All right, we've got a special guest here. This is Mark Dwyer from Hudson Bay Capital. Mark, how's it going?
Great, thanks for having me here.
What brings you to the conference?
Well, the emergence of blockchain, digital assets, and AI all in one place on the beautiful Gold Coast. How could you not come?
The beautiful Gold Coast with the grey skies right now, as I was saying to the folks before, but we go a little bit, not way back, but we go back because we work in the AI space together. And I think it's interesting with blockchain, and there's been some talks about how blockchain and AI come together. What have been some of the interesting things that you've seen, whether from the AI or the blockchain space, about just the technology?
I actually just had a really interesting conversation with a doctor that's transitioning from emergency medicine into general practice.
Oh, right.
And he's actually truly passionate about solving the healthcare inefficiencies using blockchain technology. And I think that's a tremendous opportunity, especially when we look at federally funded healthcare ecosystems like we have here in Australia, NHS in the UK, the Canadian healthcare system. Yep. The wave of demand that's coming at healthcare, we can't hire enough, train enough healthcare professionals to take care of our population, an aging population. He was saying something like within the next 15 years, over 30% of the population here in Australia is going to be over 65.
That is crazy.
And if we look at just the spending, so we say, all right, we'll throw more money at healthcare.
Yeah.
The cost of healthcare is going to outweigh the growth of our GDP. So we can't throw enough money at it. We can't train enough people. So what do? We have to use really smart technology to remove the administrative burden of delivering federally funded healthcare.
It's the only way, and we're here at a technology and emerging technology kind of conference. It was interesting to see that, people in the room were talking about, not specifically for healthcare, a lot more on finance, real estate, bonds, securities and stuff, but about how AI and blockchain can come together. Now, we worked in the AI space more around knowledge management, but we had something unique to the way that we saw things. We put blockchain into that. Do you want to tell the good people what our thoughts were on that we've been building?
Absolutely. I think everyone that's watching this has probably used GPT or some sort of language model, and if you haven't, you should very much do that. We looked at the challenges 2 years ago with the adoption of generative AI and said, hey, there's no auditability or traceability within a language model today. And the challenge with that is, especially if you're a regulated organization, financial institution, healthcare, for example, you need to be able to prove where a decision was made from, who made that decision, what that data set was that was used to make a decision that hopefully brings a good outcome, but it may have brought a bad outcome. So we need to be able to have an auditability trace on that. So what we did with Psych.ai was we built a blockchain component in there using zero-knowledge proofs, so we can say, hey, the human has been a part of this this workflow, this process, and we're going to create a micro signature on this workflow, which creates an immutable record that sits on a blockchain that we can call on at any time to see what the data source was, who pressed the button, who was a part of that flow, and what the output.
And it can't be tampered with, not like a log file on a database. So there's more of these ways that blockchain helps AI that people are going to start learning from. And it's a pretty exciting kind of time, I think. I think that there's a lot of exciting stuff that we don't even know yet, and we're the ones that are building all the frontier kind of tech. What do you think you have as like messages for people that are either interested in investing in the space or they're interested in like getting involved in the space? Like, where do you suggest that they start looking and stuff like that?
Yeah, great question. Okay, so we've hit blockchain, we've hit AI, let's hit crypto. So crypto or digital assets broadly, I think crypto comes with a negative marketing connotation. If we look at digital assets, we're starting to see huge institutions pour tens of millions of dollars into investing into digital assets. Now, whether you've got your own self-managed super fund, whether you're a retail investor, whatever the case is, if you're a fund manager or advisor, you can no longer discount digital assets as a asset class opportunity.
Yep.
Like if we look at how, and this is really simple, if we look at how Bitcoin and the S&P 500 have tracked over the last 5 years.
Pretty correlated.
Pretty awesome to see what's happening there.
Yeah.
So I think we're going to hit an inflection point real soon on the adoption of digital assets from an institutional standpoint. So we'll start to see super funds, we'll start to see larger traditional financial institutions invest in a big way into digital assets because it can no longer be ignored. And I think if you, even as a retail investor, don't have a digital asset a portion of your portfolio to digital assets, you're missing out on a tremendous opportunity.
Agreed. Well, Mark, thank you so much for your insights. We'll see you for the rest of the conference.
Okay.
Cheers.
Yes.
Welcome back, folks, to another interview here over at the DEConference, Digital Economy Council. Wow, I just totally lost that. Digital Economy Council of Australia. DECA is doing their big week on the Gold Coast. It is a mouthful. DEConference is an easier term.
Yep.
But Ben, thank you so much for joining us from AlphaNode.
Yep, absolutely.
AlphaNode Global or AlphaNode? What do you prefer?
AlphaNode Simple. Yep.
Okay,
Yep.
okay. What do you do in the space for people that may not have heard about AlphaNode?
Yeah, sure. So we've been in the space since 2017 building crypto funds. So we've got two main products, a long-only product and also a market neutral. So protecting the downside, looking for yield opportunities in the sector. So we've been around the AFSL space, which is where regulation's moving, for 8 years.
We've heard regulators on stage today.
And it's been fascinating. It's always coming. But, we're really preparing for what is coming.
Yeah.
And given our experience, we're really trying to position ourselves for that.
It's interesting because you hear the industry in a way talk about we need better regulations, and I understand that, but for some others it's just like whatever the rules are right now, we're just getting the licenses, we're just going to adhere, and we're just going to do what is necessary right now. So it's interesting to see, and there's even folks that aren't even at this conference that are just heads down building and stuff like that. But how is the asset management space in the crypto, with Bitcoin doing all its things and stuff right now? How's the roller coaster been?
Look, the roller coaster is getting smoother as the years go on.
Yeah.
So
if it's too volatile, zoom out, right?
Yeah, look, volatility is good for some returns as well. But look, I think broadly, you're talking about regulation.
Yeah.
The sector is maturing a lot, and I think the maturity still needs to continue. There's some real cultural changes that will be needed to align with those new regulations. And one thing I'm happy to share with you is 2 weeks ago, we got approved with a new AFSL. So we're going to have got two AFSLs, and one's going to be doing personal advice. So we're gearing us to be able to talk to people about their portfolios.
Fantastic.
And actually how they can allocate into crypto. So it's going to be wholesale only to start with.
Yep.
Just working around the restrictions, and we'll be very prescriptive.
Yep.
But we're looking forward to seeing what we can contribute in that space, just to hold people's hands in an advisory manner and not an educational manner.
I think that there's a lot of, whether it is retail or wholesale, there's a lot of hand-holding that is needed and stuff there, because otherwise people just don't know where to start. And if you don't know where to start, mistakes happen, right? And it's easy to just get scammed and all that kind of stuff. But education's the big thing, and you're focused on that as well. So can you tell us about that?
So when you're operating an AFSL, you need to think about continuous education and monitoring of those people who are delivering services within your ecosystem. And so for our team, we need to make sure we're getting a high bar and a high standard.
Yeah.
And so to that end, we're really keen to focus on how we can deliver not only to our team, but the broader industry, and get the industry involved in raising the education standards and really setting a bar that really takes risk off the table for everybody operating in the sector. This is going to have multiple benefits, not only to reduce risk in business for delivery of these sorts of advisory pieces, but also for insurers that are coming to the space.
Yeah.
And I think the insurers can then get some comfort to say, hey, the whole staff of this organisation are trained to this standard. They're doing certain CPDs along the path as well.
They've got the right levels. They've got the right level of the right understanding and stuff. So this is the thing that people need to realize. It's like you can't just have an industry without all the proper guardrails, and to have the guardrails, you need people trained up.
Yeah,
right. And so this is whether it's retail investors, but it's also like the ecosystem that goes around it. That is like the key thing. That is a key thing there. So people keep on trying to take away your cup. So I'm just watching that. You don't see it on camera, folks, but they're in the background. I'm like, don't tape that. That's what I'm doing.
But I think we're building a really strong, firm foundation.
Yep. Agreed.
And that's coming from every aspect of the industry that we can build, because institutional money is flowing in.
Yeah.
And it's flowing in strong. In fact, we're not really seeing retail at the moment.
Did you see this thing like stablecoins? Used to be mostly a retail thing, but the flipping happened only just recently, where stablecoin volumes are now 50% and above is insto, and is growing because they are just much larger. So that is a real sign there that instos are coming in.
They've got a pin-up child.
Yes.
Tether is a pin-up child of the sector.
Yeah.
Most profitable per employee globally.
Yep.
Institutions looking at that going, how do I get a piece of the pie? And they're engaging.
And this is the way that they'll do it. But Ben, we'll see more of you, see more on the education side. We wish you all the best. Well, the industry all the best with like the asset management side of things, because if you're winning, then we're all winning.
Absolutely.
So
it's a rising tide lifts all boats.
That's it. Oh, we'll see you on to the next episode.
Right.
Cheers. Hi, folks. It's Mark again. We're back for another interview at the DEConference Digital Economy Council of Australia. We're here with Effie from AUDD. Effie, thanks for joining us.
Thank you so much for having me.
I'm very well. How's the conference been for you so far?
It's been great. What I've enjoyed this time around is there's less of a focus on that constant discussion about regulation, and there's more of a focus on other things. It's not just payments, it's all blockchain, it's identity, it's AI, it's a number of different topics, and I'm really enjoying it for that purpose.
The breadth of discussion is amazing. The fact that people, because we work in the AI space, and people are talking about AI agents and other stuff, has been super interesting, far more than we've seen in the past. So the breadth is definitely there. And the lowering of, like, before it was like regulation, we need it. And then meanwhile, it's this dichotomy of people wanting regulation on the one side, or saying that we can't do things without regulation. And then people that are going, well, we're just going ahead and we're just doing with what is other rules now. Much less of a conversation on that. I think it's about doing things now.
It's definitely about doing, and it's about utility and use cases. And I think that's also been helped because both ASIC, Treasury, and everybody has come to the party now, and both sides of government are interested in the space, are talking about the digital economy, and I think that's put the sector at a little bit of ease that there will be action and there will be conclusions. So whilst that's been going on, the rest of us are going around doing utility and making use cases. And make it heads of us. Get to it. That's right.
Now, what's your outlook on given that, so we're having these better conversations, the regulators coming on board, we're seeing things that are happening in the space with more institutions coming on board. Stablecoins are a hot topic as much as real world asset tokenization. Must be a buoyant kind of feeling that you've got for where we're heading.
Certainly is, and I think it's stablecoin had been on the agenda for a good year and a half, I want to say, at the conferences, and every conference I went to last year was stablecoin is it's the killer app, and I wouldn't necessarily call it an app, but in those conversations, stablecoin discussions were really focused on US dollar stablecoins, and I think that's the interesting thing about what the industry in Australia is doing. Is basically we're focusing on the Australian economy and how do we leverage these these technologies and these tools in this economy to make our country and our innovation stand up against all the big players and the big boys. And I think everybody's very excited about things like the Circle IPO and that basically brings stablecoins up in the conversation in all sectors.
I think it's important to see that happening as well, because that next mainstreaming kind of event is really coming from the instos. And speaking of stablecoins, I think it was only the last couple of weeks that before, imagine that, there's no instos in stablecoins, it's all retail. But the flippening happened only a few weeks ago, where we see now more than 50% of flows in stablecoins are instos. So, and that's just going to keep on growing because of the size that they've got. So given that that's like happening, what do you kind of see as like the future, glass ball here? Where do you see things heading in stablecoin world?
I think it'll only increase further in STO. Why do I say that? Is because locally, most places, certainly in the G7 countries, have got it right in terms of faster payments, whether it's NPP in Australia, FPS in UK, or instant payments in other jurisdictions. They've got that, pay for your coffee side of things settled, right?
Yes.
What isn't as clear is two things. Institutional settlements for merchants.
Yep.
So, I was recently on a panel only just yesterday where we talked about it for things like MasterCard settling to their merchants in stablecoins. They're already doing that with US dollar stablecoins, and there's opportunity to do that in Australian dollar stablecoins as well. Yeah. And that's to hedge against risk and FX. And, merchant doesn't, if a merchant operates in Australian dollars, why are they going to receive US dollars, right? So that's the sort of opportunity that exists in that space. But as you said, that 50% utilisation in instos is the big money market funds, the tokenised deposits, all of the settlement and those interbank settlements that occur across the world. But it's the cross-border things as well, right? So
absolutely.
When we're making settlements to Singapore, Hong Kong, Malaysia, Philippines, etc., we don't do it in our native currency, and we have to do some sort of exchange, and so that happens a lot quicker and a lot more transparent and more efficiently on blockchains.
More efficiently on blockchain, that is a key takeaway for all of this. For more about AUDD, look at the show notes here, follow Effie online, and you will learn a whole lot more by just having watched this episode. So thank you so much for your time.
Excellent.
Thank you, Effie.
Thank you so much, Mark.
Cheers.
Thanks.
Working out?
Sometimes.
How much do I do working out?
Sometimes I do.
Natty or not, mate? That's the answer. That's the question. Natty or not?
I know. Natty or not.
My dream is to be asked that.
Oh, really? In a gym or just like walking the streets?
Just walking the streets.
Natty or not? It's a great question. And for those watching at home, you may have seen Shane and I on the last episode of Natty or Not, otherwise known as Red Belly Insights. Oh, no, it
wasn't me. It was another middle-aged bald white guy.
We had, because part of the Fireblocks hiring process is bold, middle-aged white guys.
Bald rather than bold.
Occasionally
bold.
Occasionally bold. That's a good play on words there, but we were part of the FEX Insights, another Insights podcast, and that is, I'm editing that at the moment. It did come out. I'm editing this one that you're watching right now. Whichever you see it on.
Good to see you on the ball, mate.
The content's going to be everywhere. When you run like 3 or 4 podcasts, it's kind of ridiculous. I'm so glad I get help, but I'm doing this one on my own. But Shane, how's the conference been for you so far?
We started on Sunday. We kicked off with the Women in Crypto event here at the JW Marriott in Surfers Paradise.
Yep.
I reckon there were well over 120.
Oh my gosh.
30 attendees. A fair share of blokes attended.
Good support.
Yeah, and it was a great night and a great way to start these out. There was a series of speakers right across the ecosystem. Then we had a panel that I jumped on, and I wasn't the only bloke involved, so that was always a relief. I had a Fireblocks intern actually present Fireblocks very briefly. We all got a few minutes to speak.
Very good.
And so I set up a young lady to speak at the Women in Crypto event, and it was her first time in front of a crowd, so you can imagine the anxiety there, but she did great.
Very good.
And yesterday was great. An emotional introduction by Amy Rose Goody, the CEO, just about how much it took to bring all of this together. And by the size of the show, I can see what it was about. But
But yeah, it's great to see some familiar faces, but it's even better to see some new ones.
Oh, absolutely. I was just going to say there's, it's always one of those things where you see new faces pop in from whether they're just curious and their business isn't quite doing something yet, or their business has a mandate to actually get into this space, or they've just been in the space for a little while, but they've never actually come to these events, right? So whatever it was that's like gotten them out of the woodworks, it must have led to some interesting conversations.
I just met a gentleman who is the chairman of the Sovereign Wealth Fund in Papua New Guinea. That's not something that happens every day in paradise.
Yeah.
Looking at a real-world asset tokenization play on behalf of the PNG government.
Very good.
I just
love RWAs. So.
I just met a VC/PE player, and it's good to see them coming back. They disappeared in the first half of 22 for a lot of reasons that you and I are going to litigate again. We're a little bit tired of hearing that.
Yeah,
but no, mate, I've met a bunch of new people.
Okay, very, very good. And what are you hoping to get out of the rest of the conference?
So it's great to hear insight from other players.
Okay.
There's a competitive play here as well, mate. I want to hear what Fireblocks competitors are saying about the market and how they're finding it here. I also want to see what our partners are saying. But the primary reason that we spend Fireblocks money to promote this and to sponsor the various events, and we've got sponsorship sprinkled right throughout the week. It's to get leads, mate. Net new business. There's marketing people and PR people that need to eat.
So all of this is going towards marketing and stuff. But my own and for folks that we work with, that you mentioned something really interesting there. Seeing the competitors and stuff. And we're one of those spaces, we're not mature enough, as in big enough or huge enough as part of the traditional markets yet, to just fight each other. Like, we have to have competition. It's like why do you have a McDonald's next to a Hungry Jack's? Because people know to go to eat there and stuff. Yeah. When they go to Fireblocks or when they go to some of the competitors, they know that that's where they go for custody. That's where they go for maturity in terms of their product. So it's a good thing that we're all here, right?
I think so. I'd like them all to leave, but if they're here, I might as well talk to them and might as well learn what their differentiation is. Yeah, but no, I think that in all seriousness, that's how we grow. There's a big enough pot for all of us, right?
Yeah. Well, they keep us on our toes. Competition keeps on elevating things. Yeah, absolutely. So more on that, maybe for another Insights episode or maybe for something else. Shane, thank you so much.
Pleasure, mate. As always.
Cheers.
Tony, mate.
All right, folks, we're back here at the DEConference with another great guest. This is Johnny from Vield. Johnny, how's it going?
Good, thank you. Yourself?
Very well. The folks that don't know, what is Vield? What's it all about?
Vield does crypto-backed loans and Bitcoin-backed loans in specific.
Yeah.
So what we do here in Australia is we lend against Bitcoin as the asset. So no difference to a property. You can use a property and go to a bank and get a home loan. With us, we could use your Bitcoin as collateral and get an Australian dollar loan to your bank account.
I like it because it's seeing Bitcoin as, the Australian dream to own a home is getting more difficult. And for some people, and we're seeing some stories out there where it's like, hey, just owning a Bitcoin or owning a couple of Bitcoin, that's like a home in a way, in terms of like the way it grows and stuff like that. And sure, there's volatility there, but still the fact that you can do things against the asset, like to borrow and get lending on that kind of stuff, that is interesting. Where did the idea come from?
Yeah, so the idea came about, for us, we've learned that over time, everyone's looking to apply digital assets, specifically Bitcoin, as a generational wealth, trying to pass it down to their families and their kids, but they never want to sell. But in times of when you need some cash flow to be able to pay for school fees, apply or go on holidays, then there's no real outlet for them to borrow against native Bitcoin.
In the borrowing that they get to do, I guess there's some rules, there's like the implementation of it. It's not just, okay, we're going to use traditional kind of means of doing it, but we're working with blockchain. Are you guys, do you guys have like those technologies built into the way that you do things, whether it's on the AI side or the blockchain side? Like, how does tech play a part in you being able to deliver a service?
I think for us as well, key is the transparency aspect and working with great providers in the space. So for us, ensuring the customer's Bitcoin is safe.
Yeah.
You can see it at all times, is our value proposition. And as we continue to grow it out, we're trying to get the feedback from the customer of what they would like and what they like to see.
Okay.
I mean, our biggest feedback was, if I give you, or if I transfer over my Bitcoin to you, to hold as security, how do I know it's there? So what we do is, with our cold storage custody, we expose what wallet address it is for them to actually visually see where the Bitcoin is at all time on blockchain as well.
I love it. And, for the conference that we're at right now, how is that going for you? Have you been is it more about networking, or is it, are you learning some things from the talks?
Yeah, absolutely. I think it's around supporting the crypto community to start off with here in Australia. We're an Australian company to begin with, and home is here for us. I think it's also very great to meet like the industry leaders in the space.
Yeah.
To be able to gain some knowledgeable insights of what else is going forward, around regulatory landscapes. We work in a very heavily regulated country, and we want to stay above rules, above board in all areas as well. So getting a good insights of what's there to come, what we need to ensure that we're doing right, and we always try to do above and beyond what we're doing.
Perfect. I think that there's a lot more coming from Vield. I checked them out. You might have seen them on Channel 7 before, but some really interesting stuff from you guys. So Johnny, thanks for your time.
Thank you. Thanks, Mark.
Cheers. Welcome back, folks, for another interview up here on the Gold Coast from DEConference, from Digital Economy Council of Australia. We're here with another great name in the Australian crypto space, Pras from Zerocap. Welcome.
Thank you. Thanks, Mark. Thanks for having me. Zerocap's where I've been for the last 5 years, and it's Australia's leading institutional liquidity provider, an OTC desk. Got a great partnership with custody providers like Fireblocks as well. So I've been a market leader in this space, and want me to share more my role and what I do?
I'd love to, for folks that don't know, what is it that you're doing in this space?
Yeah, I joined as a first BD guy about 5 years ago, and I was number 5 to kind of establish the market presence here, and came with a strong family office background as well. I used to be in hedge funds marketing, so connecting family office with hedge funds. When hedge funds were quite new in this space, a bit like how crypto's entering the institutional space now, and that's how hedge funds were back in those days. So a similar transition I've gone through with family offices and institutions. So they're the kind of client base that I manage. We're seeing a lot more fund managers coming in, a lot of our payment companies or remittance businesses.
Yeah.
So that's kept me busy, and I'm just doing the sales.
Very good. Good to hear. There's a lot of people that are interested in coming into the space. Do you have any kind of advice, like whether they're from retail or they're a wholesale, institution that wants to break in, or even just wants to invest? When people are new, and they often you somehow find a way to find all these new people that are coming into the space. What kind of advice do you have for folks that are, new to not crypto the investment, but say blockchain the industry?
Yeah. Look, it's less jargon is the main key there, and talking their language. I mean, it's a seamless transition, and I was talking to some of the guys from the bank earlier.
Yeah.
It's a transformation. You're going in from using old systems into transforming into the cloud in the same way. You just kind of move within. So even those who are working within certain roles in your own organizations or industries, you can actually start transitioning into this space in your own roles.
Yep.
You don't have to step out into a crypto business as such. I think a lot of these companies are now bridging that gap. So I think the guys that we get joining Zerocap, like even from banks, they've been coming in. They come a few times. They'll apply 1 year, and then maybe winter, and they'll go away, and then come back again. And look, it's not about picking that cycles and the timing of when you join firms in this, because then you just join in because obviously the market's hot, right?
Yeah.
But it's about understanding the real fundamentals, and I think that's the real
key.
Yeah, key to it.
I think there's going to be some amazing stuff as people learn more about Zerocap. So and what you're doing, and we'll see you with the rest of the conference.
Yeah, look, we've got a great conference here at the Gold Coast, and I think having more and more of these conferences like the DECA conferences are a good way to educate. And we're getting a lot of businesses. I've got a mate of mine who's got a business here, and they do manufacturing, and he's just come in here just to check it out, and he's decided to register and learn more about it. Yeah.
Perfect. Well, that's what we want to hear, and we're going to see a lot more of folks that are new to the space that are coming in that are talking to us, and it's just this flywheel of bringing more people in and education. So if people want to learn more, we'll put your details in the show notes below, but please do reach out.
Fantastic. Thanks, Waugh.
Thank you. Welcome back, folks. Another great interview here at the DEConference. This is the Digital Economy Council of Australia. We are with the great Rob Waugh, telling war stories. I think.
Stories. That should be my blog.
It's not the name of it though, is it?
No, it's not.
Shame, anyways, you heard the idea here first, but you do have a great blog, and you talk about really interesting stuff where you share it on LinkedIn. do you do it on Medium as well? Is that like where else do you publish?
No, I've been usually writing it exclusively on LinkedIn.
Uh-huh.
Yeah, being an ex, financial services banker. That's kind of like
It's social media.
yeah, it's social media for those guys, and so obviously old behaviors are very difficult to break, and so I'm thinking of branching out.
Okay.
And doing something a little bit more long form, but at the moment it's just going to be on LinkedIn. And I'm about to push out my thoughts on DECA on my LinkedIn. So I've just been about 20 minutes ago. I was just doing the final.
Is it meditation time?
It's meditation time, folks. It's time to get the other folks back in, but we'll continue. So, you're about to push out your thoughts on.
On the DECA thing, and what the vibe is. And I think there's a particular sea change at this particular DECA.
Yeah.
And I think what was important before has been subsumed, and we're entering a different age. And so, I hope, my thoughts will be coming to you soon.
No specific date yet, do we? Like, we don't have a specific date yet on that.
Today, I'm going to push it today.
Oh, okay. Well,
What time is it now? Well, it's like,
oh my goodness, it's 11:26, right? They have
26
on the 17th of June.
Time's right. It's 11:20.
People will be watching this post this.
Okay, it'll already be out.
Yeah.
So, are you going to post it afterwards?
I will.
Okay, so it's about the age of stable coins, and so I've taken massive poetic license with The Hobbit. And
JR would be proud.
Yeah, Tolkien will be proud. And massive poetic license with The Hobbit about how that we're the age of meme coins is over, and we're entering the age of stable coins.
I love it, and that is the maturity that we've been speaking to. We've been hearing from other guests. We when you have the RBA talking about projectification, the stuff that they're going to be doing, and continual testing from a central bank, when you have Austrac talking about the regulations, stuff that they're bringing, when you talk about instos that are coming into this space and needing maturity in terms of infrastructure, it makes complete sense, the title of what you've got. And you're a poet with your words, so I can't wait to see what you piece together. If you didn't know it, we've done interviews before back in Sydney. We talked about your DJ days.
Oh yeah,
a little bit.
Still DJing. Actually, still DJing. I DJ'd on Saturday.
But it was a particular place that you got to DJ at.
I did indeed get to DJ at Burning Man. Which I was of the bucket list thing in life. Other than marrying somebody awesome, having children, DJing at Burning Man's definitely in the top 5.
Say.
Obviously below marrying somebody else and having children.
Yes. Yeah, get that right. Just in case the family watches.
Just in case the family's watching.
But what... Okay, so that's coming out. Overall thoughts, where do you... Are you more confident now, like having been in this space for a little while, both from the tradfi, like because you were at NAB and involved in the space, and NAB, one of the big banks here for those watching, but now that you're on this side as well, you've seen both. Like, so how do you feel?
I obviously voted with my feet, but also voted with my wallet. Right, I've dumped my own money into my startup with my other 2 founders, and because it's gone through the purely theoretical stage and actually got to the this has got real applicable use cases. And the funny thing is, and it's probably this is a little bit naughty, but I was having a conversation with a senior technology person at a bank that shall not be named, and this individual said to me that blockchain was a solution looking for a problem. And I kind of reflected. It was not a great meeting for me, and I came out pretty disenfranchised. But I realized one thing: that if you look at the big 4 banks in Australia, the technology teams have been absolute Jim Cramers of counterintuitively, like they've always been total counter-indicators because they've singularly failed to deliver any great technology projects in any of the banks. I think maybe CBA is probably one of the exceptions because they've got such a great retail product. But then the fact that this guy was telling me that it was blockchain was nothing, and I was like, actually, that's reassured myself that I'm on the right track.
I think that's the key, the reassurance that you bring there, the awareness, and what this space needs to understand when it comes to where we are heading. The momentum is there. It's really hard to ignore. I think we're going to see less naysayers in the future, especially as we prove the space more.
Man, even the regulators coming to the table now.
Exactly.
Right.
They're here.
This is the huge sea change, is the fact that they've seen the Genius Act in the US.
Yep.
They've seen MICA in Europe.
Yeah.
They've seen actually the Japanese DIET was one of the earliest ones to pass the stablecoin legislation.
Yeah.
Singapore's there, Hong Kong's there. Like for Australia, when we've had such a catastrophic productivity improvements over the last decade, probably maybe a decade and a half, the country has to realize that they can't get left behind on this.
And there is no other way. Because so many others, I can understand if people think that, there's nothing else to improve. Databases are perfect and stuff. Cool, but that's not what the world thinks. So even if you're not doing it for the fact that you think that your industry is efficient enough, the fact that everyone else is moving ahead and pulling away if you do nothing should be another reason why you shouldn't ignore this kind of space. And if they can't come up with better solutions than just like what they've got, that's not a solution.
Yeah. And you've got, obviously, in the early days, those countries where money didn't work in developing economies, perhaps when the trust level of their currency is kind of low, obviously Bitcoin and stablecoins made massive inroads.
Yeah.
And we find it difficult to understand that because, we do have a trustworthy currency. We do have a trustworthy financial system.
We're a lucky country.
Very lucky.
We're not forced into the corner.
But we've got to the stage now where it's the second or third way of productivity improvements where, sure, we've got a reasonably functional equity system. It still seems to take 2 days to settle an equity transaction. And so it's kind of okay, but it's going to the point now where something needs to change.
Sooner and sooner, it's not going to be okay, but you're lucky folks because folks like Rob and team are doing amazing things about it. And we'll hear more from you and you'll be able to read, because it'll be in the show notes, the meme coin moving away from that to stablecoin thoughts, the poetic license that will be taken, and more below. Cheers.
Thank you very much, everybody. Coming at you from the Gold Coast with Mark Monford. Awesome individual. If you're not following.
Too kind. Thank you so much.
All right, you're welcome.
Cheers. See you later.
And we actually touched upon it in the preceding talk, and that is peer-to-peer transactions, but at a state level. So there are about 4 independent sources that are talking to trade between Russia, India, Russia with India, Russia with China, being traded in Bitcoin or Tether. Do you have any comment into the next 20 years, how that might disrupt the geopolitical landscape? Just an easy question.
I think that the peer-to-peer trading is actually a consequence of the current geopolitical climate, as opposed to the other way around, right? I mean, right now the U.S. is the central clearinghouse of the world, and that's a bit of an issue for multiple reasons. And I don't think that it's that much of an issue because of the politics per se, but because of the way in which we've effectively designed world trade. So it's just not robust. It's not resilient. And things happen everywhere. So obviously things will happen in that one central clearinghouse. So it's not a problem with the clearinghouse per se. It's the way that we decided for this to be, to work.
Can you comment into some of the things you're talking about, the ramifications of our current system in terms of the connectivity base?
It's really interesting. So if you go back to, this might be a prelude to one of the questions that we have later on, but 1920s when we had the gold standard, and many people in these rooms might think, oh, that was a really good time because that we didn't have fractionalized banking, and there was actual physical value to currencies and yada yada yada. Cross-border trade was horrible. The reason for that is because we're talking about ledgers in physical currency. That meant that if I sent you X number, I'm one country, another country, I'm sending you X amount of value. we would then have to send gold to each other at some point, right? So let's say that at the beginning of the year, we start trading and then we build a surplus. And at some point, we need to reconcile that. We need to margin each other, right? So we're effectively shipping gold, physical gold, to make this happen, all right? We then went away from this system, and we started to use the US dollar as a settlement currency because it was just actually much easier, not just because they wanted to control the world, which is, the narrative that everybody has in their head. It was actually functional. And that simplified the process to a certain extent, but then it added a bit of fragility in the system. Right now, if we go back to the point of peer-to-peer trading, we've always traded peer-to-peer. It's only that now we can actually settle peer-to-peer.
And there you go, folks. That was some highlights from DECA week up on the Gold Coast, where I was with Arturo, and you saw him in some of those clips. But we are back for another deep dive. And as a reminder, if you haven't seen episodes 1 to 3, and if folks haven't seen it, I don't know what they're doing. But we spoke about the product side of things, so overall derivatives. We dived down deeper into the system and how it works. So this is more of the infrastructure. That was episode 2. Episode 3, we went into a key market feature, and that was dark pools, and it came off the back of the James Wynn $100 million loss saga and people commenting on that. But this time I want to get into another area, Arturo, which is trustees, which are a part of the normal traditional finance space, but we also need it in crypto as well. Trustees, what are your thoughts on that? We're seeing trustees getting more into the digital asset space. We've seen them in traditional finance. What have you seen so far? It's a bit of a new thing. People think that crypto is just about spot trading. There's a bit more to the infrastructure.
Yeah, it's so the trustees are actually some of the most important participants in traditional finance, because they are effectively the ones that, as the name, it's in the name, right? They're the ones that are supposed to bring trust into these multi-party transactions. So effectively, when you set up a fund, the fund is its own legal entity, and there's somebody that is managing the obligations of that legal entity according to an investment memorandum or some set of rules which investors have signed up to, right? So I give you money, and you'll tell me why. Right, so you'll say, well, I'm going to use this money to invest into X, Y, and Z, and these are the rules, and this is effectively what I'm doing, right? And the trustee then takes that promise that you have made as the investment manager or as the financial product issuer, and executes that as a third party to ensure that what we have agreed to is actually happening, right? So you could think of a trustee as or rather you could think of a smart contract as a trustee, right? Because a smart contract is programmed to do a number of things, right? And it'll do them, and you can trust that it'll do them. So obviously the next question is, oh, well, then trustees are not necessary.
Which would be the natural conclusion that people may jump to?
Obviously. Unfortunately, not everything is on chain, and you could wonder if it ever is going to be. But
wait, you're saying that just because something's on chain doesn't mean that it automatically transforms?
Yeah, correct.
The place. Wow. Okay. Relations.
But look, I think that's where we're heading to, is that smart contracts don't negate the role of a trustee. They simply make it easier for trustees to do their work, to do so in a much more efficient way.
They can augment it, I guess.
I mean, they could just offer the same services at a lower cost, and they can expand their target audience, right? I mean, think of it this way: an escrow, right? And we showed this in the CBDC pilot of 2023.
Yep.
Right, we had a set of smart contracts that could offer escrows for construction payments, and the escrowed amounts were tiny. Now, what we showed was that it is these small amounts that are actually really important for a wide group of the population, right? Because if you're a tradie and you don't get paid your 20K invoice, then you're out of business. But you will not have an escrow for 20K because it's too clunky and too expensive and so forth, right? Now, a trustee manages an escrow, right? Many times it's a lawyer that does so, but then the lawyer is acting effectively as a trustee. They're running a trust account. So it's not only a specific type of entity that acts as a trustee, it's a function. Yeah. Lawyers act as trustees. Trustees act as trustees, Many different people can act as trustees because the role itself is about independence. It's about a third party ensuring that things are happening, right? So what we're noticing now, if we take it back to the initial question, that in tokenization world, because you are not tokenizing something unless you have a strong legal bind between the thing that the token represents and
token means nothing.
So exactly, and some known legal object, like for example, does the token represent the bond? Well, then if it's a bond, it needs to have a legal document that explains what the obligations are and all of these.
You see a lot of things. There's a real estate tokenization.
Correct.
Like there has to be the connection there, right?
So somebody needs to sit there and manage those obligations and ensure that the tokens are doing what they're supposed to do in accordance with the law. And if the law brings in some form of edge case because there is a ruling or something happens, somebody needs to deal with those things. So the natural known party to deal with those scenarios in the traditional world is a trustee, and therefore they can do the same thing in the token world.
It's really interesting because that concept of having a person there and the technology, in this case blockchain, is not replacing, although people think it could, it is merely augmenting. It's very similar to what we see in AI, where people, especially with generative AI and agents, thinking that, we're just going to replace. And what they've seen with the generative AI is that you get these non-deterministic answers and you can't always trust the output. So it makes things more efficient on the generative AI side, but it means it's there to assist and augment, not to replace. And I feel it's the same with blockchain. Even though you can have these specific rules, someone still needs to be accountable. There's still potentially flaws and hacks and workarounds with some of the smart contract code. It is there to assist and make things efficient. What are your thoughts on that?
Let's just look at us.
Sure.
Right? The way that we work. You've been using AI in your day today for longer than I have in that extreme sense, right? Because almost everything that you do is generated by AI.
Everything I'm saying right here is AI. So
we're actually not here right now.
Really?
But just because you use AI doesn't mean that you're not doing anything. It's actually the opposite. You're actually doing more. You're spending more time doing things. It's just that you're being much, much, much more productive, right?
I spend more time in front of clients because I can, instead of it being like, say, 70-30, 70% building, 30% in front of clients, you can reverse it. You can literally spend way more time in front of clients and less time on a build.
Correct. So in your scenario, it's not like you would have hired more people, right? That would have been more difficult if, just to manage all of that. So my point in this is that you're using AI, you're becoming more productive, right? But you wouldn't have hired more people anyway.
Yeah.
So all it's doing is that it's making you productive.
Yep.
It's giving you the potential of growing the business to the point where you can actually hire more of the right people that you want to have.
Yeah.
Right. So in this scenario, AI is actually not displacing human beings. It's enabling you.
Putting us in a position to actually bring on more people because now the business has grown to that extent, whereas it would have been so much harder before.
Correct. Exactly. And I think that it's the same analogy with blockchain, because right now, if I want to do a simple deal with someone, and look, if I want to, for example, I don't know, let's make it up. Let's say that that I'm engaging with a consultant to pay them 10K to do something, right? And we don't know each other. We might be in two different jurisdictions. Then it would be quite natural for me to, or for us to want to escrow this so that they know that I have the money, right?
And they don't release anything until they've done the work that we require.
But we won't. We will not engage a trustee or an escrow service because it's too clunky and too expensive, right? So in this scenario, it's not like technology is taking away the chance for a trustee to earn a fee, a person to earn a fee off this business, because I would not have paid them anyway. Right? On the other hand, if there comes a trustee that says, sure, I'll do that for $10. And I can do that for $10 because I'm using blockchain and these technologies that make the unit economics work for me. I'm increasing my TAM. Then all of a sudden, that person, that human being, that individual, that biological entity, right, is actually making more money. They can expand their business. They can hire more of the right people.
And they're adding competition to the space.
Exactly, right? So if we kind of go back to the question of does effectively technology always displace people? And, absolutely not for us.
There's an interesting paradox. I think it's called Jevons paradox. And the scenario that I've seen has been with bank tellers when ATM machines were ATMs, automated, what are they for? Anyway, the teller machines where you get your banknotes out of, when they started adding those, they thought that they would just get rid of bank tellers. The whole industry is just going to go down. In fact, what it allowed them to do was open up more bank branches in more areas. And because of the increase in bank branches, sure, you didn't need as many people to hand out the cash, but you still needed people to do other things. So it would increase the surface area of bank accounts. Now, I don't know how that has grown or diminished, but at least when they first started coming out, there was that fear. But the paradox being that it actually led to increased work. So it's a really interesting one. And I think I could see how blockchain being this underlying layer, people could fear it for the potential automation side of things, but in fact, it actually increases opportunities and creates new things that we just don't do because, like you said, we wouldn't have paid for it anyway.
So I think that so I've spoken to many trustees, and the questions do arise in a candid conversation. Will this displace me? It could be, will it displace me? Will it displace my business? They're not really the same question. Will it displace my type of business? Those are actually three separate questions, right? At the end of the day, I don't think that technology like these, and we're specifically talking about blockchain, displaces the need for trustees. It will displace trustees that don't adapt to the technology. But it's actually the trustee displacing himself. Because they choose not to evolve.
And the trustee being displaced by other trustees that do.
Correct. Exactly. Exactly. So I think that it's really important when we jump into ideation stages and have fear towards the use of these technologies and really understand what is it that we should fear. And I think that the answer to that is that you should fear if you are in a defensive mode, right? So if you're a business that is killing it, or you're generating a lot of profit and you have your set ways, the last thing that you want to do is change that. Right, Kodak moment. Right, that's when you're in trouble, because it's a really difficult choice for you to say, wow, I'm actually going to change the way in which I'm killing it right now because I might have competition later on. The thing is that the word might doesn't really fit there. You will have competition later on. I mean, we saw that with Google and LLMs. Right. So it's really interesting to make sure that you know what you should fear, and usually it's not the tech part.
final question for you on this, and we need to dive into it deeper, and we will as things start coming out, like whichever projects get selected for Project Acacia for the Reserve Bank of Australia and the Digital Finance Cooperative Research Centre, or DFCRC. But can blockchain tech, do you think, offer the same type of safeguards without the human layer? Is the human layer necessary? That's an important thing that I think, as people see more of what tech can do, I think that there's this growth towards, we can do so much, so we don't really need people. But I think the opposite, obviously. But yeah, what do you think about that?
I think that, look, people are always necessary because you and I are doing a deal, right? We're doing the deal because we want to do that deal. The technology will just enable us to do so, but I can't, at least for now, do a deal with a non-person, right? And if I'm dealing with an AI agent, that AI agent is still acting on behalf of the owner of that agent, i.e. your business, right? So again, as we see the economy progress with these new technologies, like for example, blockchain, we're not really displacing anything that shouldn't be made more efficient, right? And the reality is that there's a lot of things that are highly inefficient. I mean, I don't know if we touched upon this in the last segment, but when you look at how much banks spend in reconciliation, well, not only banks, but banks are an interesting beast because they'll invest hundreds of millions of dollars in technology, and it's spending time and energy in technologies that are really difficult to implement because they're actually old and suboptimal. And at the same time, when I log on to the chat services of my bank, I'm like, what is this?
Yeah.
Right. I'm actually not reaping any benefits.
Yeah.
At that level. Right. So in this scenario, that's actually money that is being wasted.
Yeah.
Because I'm not benefiting from that as a customer. The shareholders are not benefiting from that. Right. It's only really consultants and so forth. But are they really benefiting from it at all in the long run? At the end of the day, it's wasted time, because every line of code that I write that doesn't get used is a wasted line of code, even if I've been paid for it, right?
Thriving off an efficiency versus actually trying to do something right. I think there's very two different worlds. We're going to dive into more of that kind of stuff in future episodes when we do these deep dives and educational events. And we'll see you soon for another educational deep dive.
Thank you for having me.
Thank you.